Hi there, and welcome. I am so glad you're joining me today for this explainer. If you're a homeowner here in Illinois, and especially if you're over the age of 50, you probably already know a rather uncomfortable truth. Our property taxes rank among the highest in the entire country. It can absolutely feel overwhelming, particularly if you're moving toward retirement, looking to downsize, or maybe you're already living on a fixed income. But I really want to offer you some reassurance today. The state has actually created specific relief programs just for you, designed to help ease that exact burden. So let's dive right in and explore exactly what options are available to help protect your hard-earned money. This brings us to the absolute most important question we can ask right now. Are you leaving property tax relief on the table year after year? You might actually be surprised to learn that thousands of eligible homeowners over 50 never claim these benefits. Some simply don't know these specific programs even exist. Others assume they won't qualify, or, let's be honest, life just gets busy and they never quite get around to applying. But whatever the reason, leaving this money unclaimed adds up incredibly fast. You've worked so hard for your home, and eliminating unnecessary costs is absolutely crucial for your long-term peace of mind. All right, let's jump straight into Section 1, Exemptions that lower bills. The very first one you need to know about is the Senior Citizens Homestead Exemption. The math here is actually wonderfully simple. This program reduces the equalized assessed value of your home by $8,000. And that reduction directly lowers the taxable base that your property tax bill actually draws from. To qualify, you simply need to be 65 or older, and you must own and occupy the property as your primary residence. Applications go right through your local county assessor's office. And here's a gentle tip for you. While this exemption typically renews automatically once you're approved, it is absolutely worth confirming with your county every single year that your renewal is still in place. Missing it just once means losing the full exemption for that entire year, and we definitely don't want that. Now let's see how that builds into our next option, because there's a vital difference between our first program and a much more powerful one, the Senior Citizens Assessment Freeze Exemption. While the homestead exemption simply reduces your taxable base, the assessment freeze actually freezes the equalized assessed value of your home at a fixed base year level. This literally prevents that value from rising, even as property values increase all around you in your neighborhood. If you live in an area where home values are climbing significantly, this freeze produces substantial, compounding savings over time. It's a real game changer. To qualify for the freeze, you must be 65 or older, occupy the home as your primary residence, and your total household income has to sit at or below $65,000. And please remember this part. You must reapply for the freeze every single year to keep it active. I know that keeping track of all these rules and limits can feel like a lot, so let's just lay it all out side by side. You can easily compare the programs we've discussed, plus one more we're about to cover. Notice that the homestead exemption has zero income limit. It's strictly based on your age and residency. The assessment freeze introduces that $65,000 household income limit. And the final program on this list, the tax deferral, has a slightly lower income limit of $55,000. Take just a moment to see which of these align with your own specific household situation. Moving right along to Section 2, tax deferrals, or postponing your payments. This is a completely different approach, but a really vital one to understand, especially if you find yourself in a position where you're asset-rich but cash poor. This is the Senior Citizens Real Estate Tax Deferral Program. Rather than reducing your tax bill, this program allows qualifying seniors to postpone paying their property taxes altogether. Essentially, the state steps in and pays the taxes on your behalf. Now, in exchange, they do place a lien on the property. The deferred amount, plus interest, is then repaid from the sale proceeds when the home eventually sells or when the owner passes away. To qualify, you must be 65 or older, have a household income at or below $55,000, and you must have lived in the home for at least 3 years. If all your wealth is tied up in your home but your monthly income is really tight, this can honestly be a true lifeline. Now, there is a crucial point we need to talk about here. While the deferral program is incredibly helpful, it interacts directly with Medicaid estate recovery planning. Because it places a lien on your home, getting the sequence of these programs right matters enormously to your long-term financial health and to your estate. I strongly but gently encourage you to discuss this specific program with an elder law attorney before enrolling. It's just about ensuring you're making the absolute best choice for your family's future. Okay, let's shift gears a bit to Section 3, grants and local relief, because there is actually extra help available. Beyond those main state exemptions we just worked through, lower-income seniors might qualify for additional support right at the local level. One avenue is the Property Tax Relief Credit, using Form P-Tax 340. This covers what's known as the Circuit Breaker Grant.
It essentially provides a grant to help offset your property taxes, and the amount varies based on your specific income level and the size of your tax bill. Furthermore, a lot of counties offer their own local exemptions right on top of these state programs. Please do yourself a favor and give your county assessor a call. Many of these local relief programs aren't widely advertised at all, and homeowners miss out simply because they didn't know they should ask.
Let's move to Section 4, Claim Your Savings. This is our step-by-step guide. Knowing these programs exist is wonderful, but taking action is what actually puts that money back in your pocket. It really comes down to 3 manageable steps. Step 1, gather your documents before you do anything else. You're going to need proof of age, ownership, residency, and your income documentation. Having all of this ready up front avoids so many frustrating delays. Step 2, check your local county deadlines. In Cook County, for instance, applications usually open in the spring and close in the summer, but dates vary all across Illinois. Missing a deadline means having to wait a full year to try again, and we definitely don't want that for you. Step 3, submit your application directly to your county assessor's office. You can find all the forms you need right on your local assessor's website or through the Illinois Department of Revenue.
And finally, that brings us to Section 5, planning your next best move. Getting a handle on your property taxes isn't just about saving a few dollars today. It's really about seeing the full picture of your financial future before you make any major life transitions. If you're considering downsizing, moving to a lovely senior living community, or simply deciding to age gracefully right where you are, your current tax burden plays a huge role in that decision. A lower annual tax bill might make staying in your beloved home much more viable than you previously thought. And if you do plan to sell, maximizing your exemptions makes your property more attractive to buyers and clarifies your net proceeds. If you're feeling a bit lost in all of this, professionals like a seniors real estate specialist, or SRES, can help you look at the whole picture and connect you with the right advisors. I want to make sure you feel empowered and supported at every stage. Please remember, this explainer is meant for educational purposes to help guide you, and because every homeowner's situation is beautifully unique, you should always consult a qualified CPA or estate attorney for specific advice. So I'll leave you with this final thought. How will claiming these tax savings change your next chapter? The state created these programs for you, and the next step is entirely yours. Thank you so much for joining me today, and I wish you the absolute very best on your journey ahead.